So good to have you join us today. Hello and welcome to Business Daily. I'm Lee Ji-yoon in Seoul. Before we get started, let's take a glimpse of today's highlights. Popular from partners Korea has free trade agreements with is pork. And imports are on the rise as domestic demand goes up, but local pork prices stay high. China's yuan has been upgraded to a global reserve currency. And what kind of changes will this and more bring to Korea's foreign exchange market? We sit down with an expert to talk about this. Korea's current account surplus is in the black again, extending its surplus streak to a record 44 months. According to the Bank of Korea, the nation's current account surplus came to $8.96 billion in October. That's down slightly from the previous month, but up more than $200 million from the same month last year. The surplus was largely attributed to falling imports outpacing a drop in exports, although the gap narrowed. Exports fell over 15% on year, while imports slipped almost 17%. Imports of some agricultural and livestock products from Korea's free trade partners have increased a lot this year, especially in pork. Our Kwon So-ah tells us why.
Koreans are tucking into more imported pork than ever before. According to recent trade data from countries Korea has free trade agreements with, there has been an overall spike in food and agricultural imports this year. But the most noticeable rise can be seen in pork shipments. In the first 9 months of the year, Korea imported more than 190,000 tons of pork from the EU, 120,000 tons from the US, and a sizable amount from Canada and Chile. That's an on-year jump of more than 43% from the EU and a significant rise from the other countries too. So what's driving the trend? Local demand for pork is on the rise, but with domestic prices relatively high, more consumers are choosing to purchase imported pork products. Also, as the years tick by, tariffs between trade-pact partners are being reduced, which is why experts believe domestic pork producers will have to cut their prices to entice consumers away from increasingly cheap pork from overseas.
Pork consumption is expected to increase in Korea. Domestic production will go up as well. But with more cheaper imports coming in, Korea's dependency on local pork will drop even further.
Demand for imported dairy products has increased too, as the average price of cheese has tumbled more than 10% on year. The EU more than doubled its dairy exports to Korea in the January to September period compared to last year, and dairy shipments from Australia went up by a fifth. Milk from these FTA partners is around half of the price of milk produced in Korea. What's more is that milk from New Zealand is even cheaper, and the ink is just drying on Parliament's ratification of Seoul's free trade deal with Wellington. Kwon So-ah, Business Daily.
Korea might have some of the best policies when it comes to letting dads go on paternity leave, but not many fathers are actually taking advantage of this. According to the OECD's family database, Korea's paid paternity leave is 52.6 weeks for each child, much higher than the OECD average of 9 weeks. Now, this means dads in Korea can go on a 1-year leave per child while receiving some form of payment. But despite these favorable conditions, only 4.5% of Korea's total parental leave in 2014 was taken by dads. In Norway, the rate of paternity leave was about 21%, while Sweden stood at 26%. Also, figures show that fathers who actually go on paternity leave took off a little over 5 months, as opposed to nearly 9 months for mothers. A lot of people will agree that you often need a lot of money to make a lot more. Many investors often dish out huge sums to have others manage their assets. But what if you could cut back on costs by delegating that role to a robot? This idea is already gaining popularity in the US, and Korea is also poised to nip off a piece of that pie next year. Our Lee Ji-young has more.
Managing your finances can often be a daunting task, which is why many flustered individuals often end up paying big money to hire financial advisors. But what if your very own money manager ran on an algorithm and charged you half or even a quarter of the fee slapped on by full-time brokers. This idea is already part of reality. Dubbed robo-advisors, online wealth management services are able to provide customized investment advice with little or no human contact. First, the platform registers information of an investor online, taking note of variables like their risk tolerance, age, income, and goals. It then uses the answers to build a customized portfolio using exchange-traded funds, mainly going after mid-range profitability at the cost of mid-level risks. According to management consulting firm A.T. Kearney, the industry has seen dramatic growth in recent years. By 2020, robo-advisors are projected to manage assets worth over $2.2 trillion in the U.S. Korean securities firms and banks are also gearing up to introduce robo-advisory services early next year. It plans to do so by joining hands with firms like Quarterback Lab, Korea's first robo-advisory firm.
We need to be constantly analyzing various assets. I don't think human beings can be nearly as systematic, no matter how many people work on it.
While these automated advisory platforms are predicted to be highly popular among tech-savvy millennials, experts say it will still take roughly 1 to 2 years to properly evaluate the efficacy of these web-based platforms in the Korean market. Lee Ju-young, Business Daily.
Smartphones, they're getting smarter by the day, but still, they typically feature one phone number per handset for one-to-one communication. Well, Korea's fierce competition in the telecom industry is leading to the rollout of new add-ons and a bid to secure new customers. Our Eunice Kim takes a look.
Office worker Chun Hyung-jun got a new number recently. He's allocated it exclusively for work, while the one he had will only take personal calls. Both are embedded on one smartphone, allowing him to shut off the buzz of the job on weekends and late at night.
I get work-related calls on weekends and holidays when I use the same number. So it's nice to lock up some personal time by having two separate numbers.
Users like Chun were exactly who number 2 mobile carrier KT was targeting when it launched its two-phone service back in July. The company says it's already had 100,000 users sign up for the $4 a month add-on service that allows for 2 backgrounds, 2 messaging app accounts, 2 address books, all on one SIM card. Then there's the walkie-talkie push-to-talk feature that number 1 carrier SK is set to roll out later this month, following the lead of LGU Plus and KT.
저희 지금 팀 주간 회의 시작하려는데 어디쯤 오고 계세요?
대리님 저 엘리베이터 앞이에요. 빨리 내려갈게요.
우리네 회사 앞이에요. 바로 올라갈게요.
Distance is a non-factor since the feature relies on the provider's communications network, and a bevy of people can link up, whether for corporate settings or outdoor activities.
To be honest, it was frustrating to have to wait on multiple people to text back. With this feature, it's easy to communicate, and since it's voice, you get responses immediately.
One thing to keep in mind, the walkie-talkie application eats up about half a megabyte of data per minute compared to the 100th of a megabyte to send a message on the popular KakaoTalk app. Nifty new options brought to fruition as companies elbow to secure new customers and a bigger market share in the tech-savvy country of Korea. Eunice Kim, Business Daily.
Following the news of the inclusion of China's renminbi in the IMF's reserve basket this week, we're seeing some major changes in Korea's financial sector surrounding yuan trade as well. Let's find out what those are.
The International Monetary Fund approved the inclusion of the Chinese renminbi in its SDR basket, giving the yuan status as a global reserve currency. This decision is expected to open up a new door of opportunities for the Korean economy, closely tied with the world's second largest. Just this week, Seoul marked its 1-year anniversary since opening direct trade of the won and yuan in the country. The daily trading volume between the two currencies has quadrupled in the past year compared to a year earlier, with a daily average of transactions amounting to more than a quarter of $1 trade. On top of this, Korea also plans to become the first sovereign issuer of yuan-denominated bonds in China to meet the growing demand from local companies in offshore issuance. It also hopes to eventually become one of the top overseas yuan hubs. So with yuan transactions quickly growing in the global trade market, how will these changes benefit Korean firms and the country's economy?
And to tell us more about this, Kim Il-sun, director of the Society for National Infrastructure at Hanyang University, joins us in the studio today. Welcome.
Pleasure to be here.
So amid rising demand for direct yuan transactions, Korea actually plans to adopt the direct quote for exchange between two currencies starting next year. What kind of changes will this bring about?
Well, more trading will basically mean that Korea will have more reserve yuan, basically speaking. It'll mean that Korea will have more safe cushion or leverage against the US dollar fluctuation. Once the won yuan trading market in Shanghai opens next year, Korean won will be traded in China. First time one is traded outside of Korea. It'll become more of the international currency. So to make a long story short, the value of Korean won will be escalated, and the yuan reserved by Korea will also get increased.
All right, then Korea is also set to become the first country to issue yuan-denominated foreign bonds in China. Can you tell us more about this?
Sure. The government is issuing a bond in foreign country to borrow foreign currency because they don't have the foreign currency in the domestic market, basically speaking. Let's say if a value of the US dollar increases, the government steps in to stabilize or equalize the fluctuation rate. But they need to have the foreign reserve to do that. So because they don't have it, they issue a bond to borrow the foreign currency to step in case there is an emergency or need to control the foreign exchange market. Imagine the Korean government saying, hey, let me borrow $1 billion. I'll pay you a 4% interest rate. I'll pay you the principal amount in 10 years. That's what we call a foreign exchange equalization bond.
All right, and all this comes amid the news that IMF decided to include China's yuan in its SDR basket, right?
Sure. Well, it's called a panda bond.
Panda bonds.
Panda bond, signifying the China, I guess. The Chinese government first allowed the panda bond back in 2005. At the time, it was International Finance Corporation and Asian Development Bank participated in the billion-dollar scale panda bond. But at the time, the repatriation of the money from China to outside was not allowed. But with the inclusion of yuan in SDR, the Chinese government must open up the panda bond as well as the foreign exchange market. So the Korean government is stepping in to take this advantage as the first mover to issue the panda bond for the first time of any other country out there in China. They plan to issue about 3 billion yuan, which is about roughly $500 million.
Wow.
If it gets successfully issued, Korea will be the first nation to issue panda bond in the history of China.
Now, we're wondering, though, China is such a big country. I mean, it's the second largest economy in the world, and I'm sure it trades with a lot of countries around the world. So why did it give Korea the first green light to do this?
Why Korea? Well, long story short, China considers Korea as a significant counterpart in trade and foreign exchange market. You see, China only opened up its foreign exchange market back in September 2015, which was only a few months ago. HSBC Hong Kong, as a bank, was the first issuer of the panda bond since September. But Korea would be the first nation, as a nation, to issue the panda bond. Korea is the second largest trading partner of China. So if China test the trading between won and yuan directly, it'll be a good litmus test on how the yuan will perform as an international currency, I believe.
All right, well, the number of won-yuan transactions is obviously on the rise. So what kind of impact will all these changes have on the Korean economy as a whole?
Sure. Korea can expect to become the center of the won trading market internationally because it's the first country to get very close with the direct trading with yuan, both in Korea as well as in Shanghai, China. Because it's through an equalization bond, Korea is expected to reserve more yuan, which means it'll have more cushion to protect and control the foreign exchange market. when the Korean government issues this bond in Korea gets successful, it'll set the pathway for other Korean financial institutions such as a Korean government-owned Exim Bank or KDB to replicate the same issuance. Simply means that it'll make the making of the capital raising in China much easier process for Korean enterprises.
Well, what was it like for business before this all happened, when it was the won and dollar trading?
Well, when it was only dollar and won trading, it had less options. It had more dependency on won or euro or yen. Now we have yuan as more option to trade. It'll have more risk hedging cushion to play around for governments as well as for the enterprises.
All right. Thank you so much for your insight
You're
today,
welcome.
Professor.
Sure.
And that wraps it up for today. Thanks so much for watching, and we'll be back tomorrow with more at the same time, same place. Until then, goodbye.